Have you missed it? Like, do you guys think, I should have got in on Bitcoin?
I don't spend long
5 years ago.
Bitcoin.
And Bitcoin is something that certainly a lot of people think, is going to rise as an alternative currency.
The Australian Bitcoin Podcast, presented by HardBlock.
It's not a currency, it's not money. I don't understand it.
All right, good morning, everyone. Welcome to the latest episode of the Australian Bitcoin Podcast. My name is Mike, and I'm here with DJ to bring you the latest in Bitcoin news with an Australian flair. How you going, DJ?
Yeah, good, man. All-time high today. Feels good.
Oh, yeah. Yep, good vibes all around.
It's okay. It's okay, right?
It's okay.
Like, it's what, 110 something at present? 111,000.
111K US, so 172,000 Aussie Pacific pesos. Getting there.
That's not a new all-time high, though, in AUD, I'm pretty sure.
Which is surprising, but it's coming up soon.
Well, I did a bit of research just before we got on air, and the recorded all-time high in Australia is $175,000 dollars. So we're a couple of digits off, but yeah, give it up for the strong Aussie Pacific peso against the USD, apparently.
Yep. Yeah, we've made some gains, but I'm sure we'll topple that figure in the next day or so, maybe, unless I've just jinxed it by saying that. We'll find out.
Back to 58.
So we're at block height 897,797, and median Australian house price in capital cities sitting at $905,000 for will get you a median house in a capital city. And with the recent price gains in Bitcoin, that means that's 5.23 Bitcoin will get you a house in an Australian capital city. Realized monetary inflation for Bitcoin sitting at 0.84%. Latest Australia's inflation print 2.4%, firmly in their target range of 2 to 3%. Obviously, that doesn't mean it's backslid on all the high prints that were happening over the last couple of years, but just don't worry about that. Just forget about that. It's in the past, right? Doesn't impact us today, right?
No, it's kind of like, when a train is leaving the station and you're in one of the back carriages and you hear the whistle blow, and then the train sort of shudders as it shunts off the line, off the tracks, and you don't actually go anywhere. You just feel the jolt, and then there's like a slight delay of a couple of seconds before your carriage actually begins moving. Yeah,
Yep.
That's inflation.
Yep. That's it. So, let's talk a little bit more about the price. So we've had I think it's about 8% bump now in the last 7 days alone. So pretty good after considering 3 months ago, we were at some pretty scrappily low figures. We were at 75K 2 months ago, maybe a little bit longer. And so we've surged right back up after that tariff turmoil that was happening, and sentiments are high, but and analysts are very, very frothy. They're predicting a lot further gains to be had. There's obviously lots of people that are urging caution and that sort of thing, but sentiment is looking very good. And I don't know if you have any thoughts on, or you want to make any predictions, or you don't want to jinx it.
I don't want to jinx it, and I'm trying in my quieter moments to take a leaf out of Chris's book from Bitcoin Alive and just refuse to look at the price. But I'm just not that disciplined, like there is, you definitely feel that concept of the wealth effect as a Bitcoiner, when it drops and your mood does kind of drop, no matter how long you've been in this thing. I think.
Can you explain that? Sorry, the wealth effect?
The wealth effect is kind of like when people are feeling like they have more money, they effectively go out and spend it. They have more. It's kind of like, I don't know. I've noticed this in the rare occasion that I'll go shopping, for instance, and I'll like I need a new pair of jeans or something. I go up there, I'm going, do I need these jeans? Maybe I could just like patch the old ones, that sort of thing. But you end up sort of making that transaction, sliding whatever it is, $100 across the table. I don't know. I haven't bought a new pair of jeans in a long time. But my point is that once you make that first transaction, you get comfortable. You're like, oh, that wasn't so hard. Maybe I can go and buy some other shit. And you start walking around the shops. The next minute you leave and your bags are full.
Sure, and you're saying you fall into it a lot easier if the price is running.
If the price is running, it's kind of like they used to talk about it when house prices were going 25%, year on year between say 2020 and 2021, and they were talking about the wealth effect of Australian households because all of their homes, increased in value by 25%, and so you tap your Equity Mate card and you go out and you get a new kitchen or new car or holiday or whatever it is. You've got all that pent up demand that they talk about.
Sure.
So yeah, like I guess when Bitcoin price runs, you're psychologically like, oh, okay, like we are directionally correct. I am correct in my thesis. And at that point, it's really important to do the stay humble part of the meme so that, you're already annoying enough to friends and family and neighbors. It's kind of, at that point, you don't want to risk a $5 wrench, or at least an excuse for a $5 wrench attack, $10 wrench attack. Yeah.
Yeah. When price runs like this happen, I try to, think back to, first principles of why I'm in Bitcoin in the first place, the concept of saving. I just read a book called The Richest Man in Babylon, which is very pedestrian economic advice, savings advice, but it's it does give you some good lessons to keep in mind as prices do run, and you remember that you've got some principles you want to stick to, and that's going to see you through. So off the back of these prices, we've seen Bitcoin has overtaken Amazon as the 5th largest asset in the world. So we've now passed Google. I think it might have been last time we spoke, we passed Google. This time, off the back of this price run, we've surpassed Amazon. Mm-hmm. Now we've just got Apple, Nvidia, Microsoft, and gold ahead of us now.
So what are we at, a $2.21 trillion market cap? That sounds nice.
Does sound nice.
Yeah.
So Apple's sitting at $3 trillion.
Okay.
So got a little bit to go before we get up to that point, but
little ways to go.
Yeah, could happen.
So we didn't also hit the all-time high, and I think this price point is a lot more indicative of the strength of Bitcoin, but we haven't hit it in gold. Interestingly enough, we haven't surpassed previous all-time highs in gold terms. So, bit of work to do there, I reckon.
Sure.
Yeah.
All right, let's get into some headlines. So, just a recap of our sort of revamped launch of the Australian Bitcoin podcast. Basically, the flow we're trying to get into is each week we'll give you an update on where the price is at in general, where the network's at in general. Then we'll dig into some major topics, some juicy things that have happened since we last spoke. We'll dig into some Australian specific topics, and then we'll do just rattle off some interesting enough headlines that are worth shouting out. So what I reckon we start off with is a recent ruling in an Australian court, which has caused a bit of a stir amongst Australian Bitcoiners. A Australian court ruling could open the door to as much as $640 million in capital gains tax refunds on Bitcoin transactions after a judge ruled that crypto should be treated as money rather than a taxable asset. Now, it's caused a bit of a stir. It's a bit of an attention-grabbing headline that the Australian Financial Review put out there. Bit clickbaity, as some analysts have correctly identified. Do you want to take us through a little bit of the details on this one, and maybe some of the, pump the brakes a little bit on the hype?
Yeah, look, I haven't looked too far beyond the headline, but I did see Dale Warburton, who is a bit of a legend in the Australian Bitcoin space. He hosts where he hosted Bitcoin Alive this year, and he's always got good takes. His show Why Bitcoin is always worth a look as well. But anyway, he did a bit of a breakdown on this, and effectively the TLDR is lone judge, lower court, ruling that CGT may be eliminated. It's like when you look past the headline, you see that it was a judge from a lower court circuit, and I'm pretty sure he just didn't get the memo. There's probably someone in a higher up department in some sort of government institution that is either drafted or is drafting a quick memo over to this guy to say, yeah, that's not how we do things here. That's not happening. But I mean, the long and short of it is, the AFR wrote the article that Bitcoin sales may be capital gains tax exempt, CGT exempt, sort of like swapping a $20 note for two tens. And there's this notion that they might issue a $1 billion refund. And Dale seems to think that with regards to legal precedent, that's probably not going to happen. It's hard to pry dollars away from the ATO. Their pockets are deep, and they're not your friend. And good luck getting all of that back. But it's like a step in the right direction, I suppose. When you think of it, it's interesting to think that was a headline in the AFR at the same time as we're discussing, the capital gains or the unrealized tax on capital gains or whatever it is for superannuation, and that's far more egregious, if you ask me.
Yeah, so we'll get into that in a moment. But this case from the lower court is interesting, and you do wonder if maybe this judge does know what he's doing. Maybe he knows that, or has already received such a memo, but he kind of knows what he's doing. Maybe
he's a Bitcoiner.
Maybe he's a hodler. Maybe he's a Bitcoiner. So the judge in this case is Michael O'Connell. So if you get the chance to glaze him a little bit, go for it, because we want to pump up his ego and get him to stay the course if you can.
We'll send him an easy Bitcoin book.
Yeah, that's it. So just some more context if anyone's missed the meat and bones. Basically, there was a case where it's a criminal case. A federal police officer was involved with some criminal activity involving 81.6 stolen Bitcoin back in 2019, which at that time was worth about $492,000. And then at current market prices, that same Bitcoin is worth about $13 million. And so the question was around, how should this be interpreted in terms of clawing back value and compensation and all that sort of thing. And the judge in this case basically said, in this case, we're going to treat Bitcoin as money, not as property. And, there's not too much information available on this so far that I could find, but it seems to be so that the judge could apply a more realistic punishment for the crime. Like, it actually seems like it's so that he could maximize the amount punishable to in this criminal prosecution case. Like, no, it's not. You didn't steal $492,000. You stole $13 million. $13 million. So he's basically trying to absolutely smash this guy with the gravity of his crime, and in doing so, has opened the door for this reinterpretation as Bitcoin as money. So he probably doesn't really know what he's doing. He's just trying to get the maximum possible punishment for this guy. But at the same time, he's opened a can of worms for the ATO. But yeah, as you were saying before from Dale's comments, I think everyone needs to put it out of their mind that they're going to get any sort of compensation from capital gains tax paid to date. I think that that's gone. Don't think you're going to claw back any funds there. But this could be the first step towards tiptoeing towards maybe a more favorable tax arrangement in the future, regarding Bitcoin and the transfer and sale of Bitcoin. So, any further thoughts on that one before we move on?
Not really, man. Keep going.
Cool. So you briefly mentioned the pending legislation changes, regulatory changes around taxation on unrealized gains. Yes, in super funds. So they say that, oh, don't worry about it. It's only for balances over $3 million. So it's only for the rich, right? But what everyone seems to forget, and we mentioned it before with inflation rates they were quoting earlier, it might not impact you today, but fast forward to 30 years, and a $3 million super balance is like a $300,000 super balance today. Yeah. So while it may not impact you now, it will probably impact you in the future. And a lot of people just don't realize this. They see that $3 million mark, and they're like, well, this is never, ever, ever going to impact me. Obviously, it's quite likely to impact Bitcoiners, but even your average punter may be impacted as the Pacific peso continues its surging inflationary periods as time rolls on. So seems to be not getting the attention it deserves, I think.
Yeah, I've noticed like a few commentators online, like Matt Barry and his ilk, I suppose, Tarek Brooker, etc., making some comment on it. There's a few others as well. But to your point about introducing it for like quote unquote rich people only, like if you've got balances over 3 million, for the uninitiated, you think, yeah, as you pointed out, like, oh, that's a lot of money, and I don't have that much money, and I probably never will. So it doesn't affect me. Yeah, cool. Eat the rich, tax them, blah, 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 blah. But if memory serves, that's how the income tax was initially presented in terms of the wartime. Obviously it was to pay for the war, but it was only going to be for rich people first up. I think if I look here, the Revenue Act of 1861, this is in the US, imposed a 3% tax on incomes above $800. And then in Australia, income tax was first introduced at the state level in Australia. To 1885, these were modest taxes, often targeting higher earners to fund colonial governments. And so you fast forward 100 years or so, and we're all getting rinsed like every dollar we spend and earn. To be fair, you pay payroll tax on the way out, you pay income tax on the way in, etc., etc. You pay sales tax. So it will affect you. And furthermore, I don't have the data in front of me, but I remember Andy from the Bitcoin Advisor doing a presentation at a Bush Bash a year or so ago. And he was basically saying that relative to inflation, people looking to retire in the next, say, 20 to 25 years, you're going to need a super balance of at least $3 million. Like, that's just because of inflation, etc.
Yep.
So, it will affect you. And it is... it's retarded, to be perfectly honest with you. Like, it is the dumbest thing I've ever heard in my life. Yep. It is so communistic, so socialistic.
Yes.
And I know that it probably won't cause too much of a stink straight up, but I don't know, man. You give an inch, they take a mile. We've been here before, You're
using the right language there. It is outright communistic in all spirit of the word, and the government knows exactly what they're doing. The guys running the top, the things at the top. This is a long play. I think it would still be. They know what they're doing, but your average MP is generally going to be economically illiterate, and your average punter is generally going to be economically illiterate and doesn't understand they can't extrapolate into the future and understand the implications of such a practice. And commenters have already said that this will cause capital flight. It will do a similar thing to what happened in Norway when they introduced a similar egregious taxation scheme. And ultimately,
the kicker is that they're all exempt too. That's the thing. The MPs,
yes,
the pollies,
and the MPs, the politicians are all exempt, so they'll sign off. They'll happily go with it.
That's insane to me. Like
is,
the fact that we're even having this conversation in Australia.
Yes.
Just like not to sort of and anyone that's a Bitcoiner, and I'll speak for myself, but I would imagine this is a fairly universal case. You've got a decent amount, maybe a measly amount if you're lucky. I got a friend of mine who had a measly amount of super in his account. He was self-employed, owned this business for almost 30 years, and barely makes contributions to his own super because, cash flow, et cetera, et cetera. Why would you? And he was, he owns the building, and there's other assets that I guess he was looking to retire on, as opposed to like having a nest egg of equity and all the rest of it and superannuation funds. Anyway, a measly amount. And he always just figured that as long as he can sell the business and do that, he'll be kind of okay. But he was still concerned and worried that he would have to make up a shortfall somewhere. And once he started falling down the Bitcoin rabbit hole, he started grokking it, ended up rolling his measly super into an SMSF. And, he's never had more money in that thing ever. And he's chuffed to bits, and he's slugged his guts out for 28 years. And now they're just going to come in and pickpocket you.
Yep.
And completely undo all of that work that you've just spent 28 years. Like,
yes.
I don't understand the concept of how you can meet in a room with a couple of dudes, write things down on a piece of paper, pass it around, and then go, cool, rubber stamp it. Now everyone has to adhere to that. And meanwhile, you've got other people that have spent the best part of 30 years, blood, sweat, and tears to be productive and valuable members of their community just get rug pulled like that. It's
yes.
I can't even.
It's punishing the people that have taken it upon themselves to save for their future. And yes, it does allow for favorable tax arrangements. And yes, there are some edge cases where people do take advantage of the system more than they probably should. But end of the day, it is punishing those that are saving for their retirement so that they don't need to rely on a state pension. Mm-hmm. So it is egregious. It's awful. And if you're wondering what you can do, obviously the first instance I would say, talk to your MP, talk to your representative, write to them, try and get a face-to-face meeting, try and get them on the phone, have a conversation with them and express your unhappiness about this. And your other action is to invest in Bitcoin as a SMSF asset, because, it is an asset that, and speaking a bit candidly here, it's one that does allow you for certain freedoms, so that if it does get to a point where you may need to abscond and do a Norway and leave, it's a tool in your tool belt. Just saying.
Yeah. Not advocating, but just commenting and
commenting.
100%. Yeah. I mean, I don't have the quote at hand, but you become an outlaw when stupid rules are initiated. Like if there's that, I think it's a quote even in one of the early Bitcoin articles on what was it? Basically, if privacy becomes only a thing for outlaws, then everyone will become an outlaw. Something like that. Butchering it. I'll look it up.
But yes, there is a point. There needs to be a line drawn in the sand where if the rules that the powers that be are writing for the rest of us on that paper and passing it around and giving it a yay, there is a point where we just need to say no more. And people need to start seriously thinking about where that line is for them and for their community and for their family, and start to organize around that, start to organize politically around that. And, with the upheaval around the break in the coalition between the Liberal Party and the Nationals, for anyone that missed that, massive political upheaval in the wake of the election, there is now fertile ground for political movements to spawn in the wake of this disillusionment of the coalition. It's still unclear what might happen, but this is a time for new movements to be birthed and come forward and possibly advocate for true freedom and ideals that resonate with a lot of Australians.
Yeah. The Fourth Turning is a great book to read and get a sense of this. I reckon this this is crucial reading. Very, very dry in the middle. You could probably skip most of that. But top and tail, brilliant, fantastic, excellent book. There's tools out there, and just be aware. Use the tools.
That's it. Use the tools. Yep. And there are other tools available. Obviously, Bitcoin is just one tool. Political organization's another tool. And there are plenty of other tools, implements out there that you can explore to get your point across, if you know what I'm saying. Anyway, let's move on. Let's talk about some more technical stuff regarding Bitcoin and some BIPs, some Bitcoin. I'm having a brain fart. Is it Bitcoin Improvement Project? Bitcoin?
Yeah, Bitcoin Improvement. God damn it.
I've forgotten the bloody acronym. Anyway, BIP 177, BIP 176. We'll talk about that. We can also talk a little bit more about the op return stuff we spoke about last time. But BIP 177 is quite interesting. It's another debate that's come forth at the moment. So BIP 177, it's a proposal to redefine
It's a proposal.
the Bitcoin.
It's Bitcoin Improvement Proposal. Sorry.
That's it. Showing our ignorance for a moment there. Basically, it's a proposal that redefines the base unit account for Bitcoin, currently colloquially known as sats or satoshis. So one Bitcoin is 100 million satoshis. This proposal basically says to consider that base unit as Bitcoin. So rather than saying 100 million satoshis, you would say 100 million Bitcoin.
Mm-hmm.
And ostensibly it's to try and assist with the general logic of how a normal person might rationalize their understanding of Bitcoin in the real world. So rather than thinking in terms of decimal places, like, so 10,000 sats, that puts 0.00001 Bitcoin. Okay, yep.
It's already tedious.
Yeah, so it's a bit tedious. So the proposal is basically to try and make that a bit easier by redefining this base unit of account to Bitcoin.
Mm-hmm.
So one Bitcoin, you're basically saying I've got 100 million Bitcoin. Now, it would keep the existing BTC sort of ticker label, as you see when you look up Bitcoin's price on your favorite, market tracking website. It would still say one BTC is one BTC as it currently is today. But this is changing it so that if you were using an app or like a wallet that might denominate in satoshis or sats, it's basically saying that would shift and become, instead of saying 1,000 sats, it's 1,000 Bitcoin.
Mm-hmm.
And using that same app, having one Bitcoin today would actually mean you've got 100 million Bitcoin in that app, and you can send your Bitcoin around the place. And so far, it's being met with quite a bit of skepticism. So similar to the op return proposal that was made, quite a lot of downvotes on the old bit request on the page there. What are your thoughts on this proposal?
I've seen John Carvalho, who was the one that introduced the BIP initially, introduce this, a couple of months ago. And he has a wallet, Synonym, the company that he's the CEO of, has a wallet called BitKit, which I've played around with a little bit. And it's a very normie-friendly wallet. Like it's quite elegant in the way that it's designed, its UX, its UI, and it doesn't mention sats at all in that wallet. It just has the Bitcoin B logo, and it just shows it as Bitcoin. And I've been going back and forward
in a non-decimal amount, in just a number of
just the number, exactly as he's introduced the BIP.
Sure.
Which we'll put the actual article. We can put the BIP from GitHub in the show notes, but he's got a Medium article, BIP 177 for Dummies, which is a decent article to read. But effectively, it's a really easy wallet, and I think personally there's a certain amount of friction. I get the idea of having hurdles or some sort of proof of work that's required to understand this thing, but I don't think Sats is the hill that you need to necessarily die on. And it's certainly not saying Sats is outlawed and we can't use Sats, the word Sats anymore. And we can't say stack Sats and we can't, say anything to do with Sats. You can use that colloquially, and that's fine. Like, just use it as Sats, use it as bucks.
Just like when you say bucks instead of dollars.
Totally. Yep. But then for the new initiate that's coming into Bitcoin and is sort of seeing Bitcoin, and I mean the unit bias, it takes out the unit bias as well. You don't need to buy a whole Bitcoin. You can just buy Bitcoin. You can buy bits of a Bitcoin. Like, I think that makes a lot of sense. It's very logical to me. And quite frankly, I'm down with it. But for whatever that's worth, I probably won't be using the word bits, but I just don't care. Like, to be honest, I'll use the word Sats, but I think for industry and the wallets and just that general consistency of communication of what this thing is, whenever it's kind of mentioned, I think bits does make a lot of sense for sure. Or Bitcoin, just keep it simple. Remove the decimal.
To be specific, there is because you mentioned bits, there is another pull request 176, which is about classifying bits as an official term to represent 100 sats. So just to complicate things further. And again, I think I'm not on board with that. I think that adding in my mind, trying to do mental math, and I'm trying to think, okay, well, now I can talk about bits, and 1 bit is 100 sats. That doesn't help me. That doesn't help my mental math. So I think that 176 is not helpful to us. So hopefully that gets recognized as such. But yeah, my overall thoughts on 177, the changing sats to Bitcoin, I'm generally on the side of don't do it, because I'm thinking practically in terms of the amount of change in all the existing software and infrastructure that would then need to change to support this, accommodate this on the the thousands of different wallets and apps and everything that are already being built. Would suddenly need to go back and change all these labels and lexicon and all this sort of thing. So there's a lot of work to be done if it does go ahead. My thoughts are it's still part of that classic UX problem, right? Like, this wallet you described earlier has solved it by just they don't deal with the decimal places. They just say they just list it as Bitcoin. And I think the point is similar to the Operaturn thing. It should be up to the wallet software developers and stuff to choose exactly what they want to do in their product. And then it's, free market and see who wins in the marketplace of ideas, right? This does smack of a little bit of a similar change where it's like, from on high, this is the change we're making and everyone needs to follow suit. I'm not sure if that's the path we should be going down.
Yeah, I don't know. It's necessarily like, someone like John Carvalho talking about, like, just decreeing we should all flip to bits. Personally, as I said, I get the logic. It makes a lot of sense to me and I'd be fine with it. But I just think that culturally it'll just emerge irrespective. And, if it's a chasm, if it's really that big of a chasm for someone to shy away from looking further into Bitcoin, they have a little bit more work to do on themselves before Bitcoin has a little bit of work to change it from bits to sats. It's kind of, if that's the hurdle you're getting stuck at, well, yeah, we have a word for that.
All right. Well, let's move on from that one. We'll talk a little bit about the Operaturn stuff and where that's at, and then we'll move on to some more headlines. So for anyone that missed last discussion or the chaos on Twitter that followed, basically there's a debate raging about a policy change to remove the cap on Operaturn, on the data cap. The data carrier cap on Operaturn parts of a Bitcoin transaction. And some people think this would lead to more spam on the network. It probably would. It would lead to more node overhead. If you're operating a node and then you're carrying all this arbitrary data on the blockchain, on the Bitcoin blockchain, then you're increasing your overhead for running the software. So there's still a lot of negative energy towards not removing this cap. The original thread discussing it has been closed, so there were a lot of controversial comments and arguments made in that thread. They've closed it and they've segmented it in a different thread now, talking specifically about uncapping the data carrier cap by default, so people wouldn't need to go in there and change it themselves. They're basically saying we'll change Bitcoin Core so that this cap is automatically gone. So that debate is still going on, still raging. There's still not too much. There's no real consensus on where things might go. Generally, conservative people are saying that it may happen eventually. If not now, maybe in the future it still will happen as a part of sort of tidying things up on the back end. But it's still a little bit up in the air. I don't know if you have any further thoughts on that.
I haven't really developed a thesis further to when we last discussed this with Bayani on the last episode, but I think it's given us something to do. It's given us something to talk about. Certainly, Bitcoiners. It's something that I haven't really spent again a lot of time on. I just keep it as money. Make sure that everyone is invited, or anyone is invited, not necessarily everyone, but. Just keep it as money, and if it ain't broke, don't fix it. I'm not really one to get into, we should all just run knots now. We should all just run the Bitcoin. I watched a conversation, like a fireside, I guess, with Eric Voskuil, who was speaking at PubKey last week, and I enjoyed that conversation. Voskuil gets a lot of people offside, but I kind of dig his vibe and his semantics around the whole thing, and basically knots and core are the same thing. It's just you're filtering out the spam on knots, obviously, and ultimately it doesn't matter because the fundamental architecture, as Voskuil was talking about in that episode, needs to be rethought, which is why he advocates for LaBitcoin. I'm not a LaBitcoin stan, but I just think it's probably a little overblown, and I should stop commenting on
it. Sure. You mentioned Bitcoin knots there. Since this sort of Operaturn discussions popped up over the last couple of weeks, the number of nodes that are running Bitcoin knots has increased quite a lot. I did see a statistic somewhere floating around. I'm trying to find it now. I can't seem to find it, but basically this has been a bit of a marketing play for people to adopt Bitcoin knots and run it on their nodes. So there are a lot of people making the switch to try and make a bit of a statement against spam, because that's what Bitcoin knots does, as it's a forked implementation of Bitcoin Core. It doesn't make any consensus changes, but it does just sort of impact on the transactions that do get carried on such nodes. And there's been a surge in adoption of people switching their node software over to Bitcoin knots. So that is a way that you can make a bit of a statement if you do feel like you want to weigh in a little bit on the network itself.
Bitcoiners are not immune to the current thing. They think they aren't, but they have their own little current thing, and this is one of the current things, unfortunately. It just run knots, run core, run the Bitcoin, run whatever bit of Bitcoin software you want to run, and just shut up and transact on the chain, because the chain's pretty empty at the moment.
Sure.
Just use it as money.
Well, that's exactly where, I was going to say that before, which is, I think that this problem will become a bit moot in the future, where it should just get priced out of the market naturally. Like as fees increase to put data on the blockchain because people are adopting it more and it's becoming more like a global standard, naturally it should become prohibitively expensive to make transactions to put random garbage data on chain. And so as long as adoption continues to increase, this problem should solve itself. So really we'll wait and see. And again, we briefly mentioned this last time, but this is ultimately a bit of a distraction away from some more pressing matters around the network. So the one that I keep banging the drum on is the mining centralization issue that we're facing at the moment. Because you can make changes to core, you can make changes to your node, you can run Bitcoin knots, you can do all these sorts of things. But at the end of the day, if this mining centralization continues, it's currently being centralized in the US. Like there's estimates as high as 75% of mining activities happening in the US now, focused in Texas. And, we've not seen a situation like this since it was centralized in China. And there was a fear that, there could be some co-opting of the network through malevolent forces over there.
Mm-hmm.
Who's to say that can't happen with the US government interference or some kind of corporate interference with that level of centralization happening today? So my hope is that people kind of downplay the op return controversy a bit and focus more on the mining centralization topic a bit more and start to think about solutions for that one, because that's the one that's more prone to keep me up at night than the issue of spam.
Yeah, I definitely would co-sign that as well. The notion that you could fire up the money printer, kind of like when we saw with the whole Doge and USAID scandals and corruption, or the funneling of effectively US taxpayer funds to a raft of highly irrelevant things that you could argue were funding things that the average taxpayer doesn't care about. Depending on your incentive, you could fire up the money printer and fund the corruption of ASIC chips or something like that. If you've got a lot of money, you've got a lot of power, and he who holds the gold makes the rules. You could in theory corrupt I mean, there's only a few chip manufacturers in the world, and it wouldn't be too difficult to sort of try and buy them off, I suppose. So it is definitely a non-zero chance that could occur, and I think it's a much more interesting and pressing problem than the op return debate. I agree.
Yes. Yep. So what can you do about it? When you see people arguing on Twitter or having debates on spam on chain or anything like that, just be like, oh yeah, all right. What about the mining problem? What about the chip manufacturing problem? What are we doing about that? And try and refocus the conversation on more productive and more pressing matters in your own little way.
Yeah.
Are you looking for a simple way to buy Bitcoin in Australia? HardBlock makes buying Bitcoin easy. As Australia's longest running Bitcoin exchange, our mission is to help Aussies simply and easily buy Bitcoin and take it into self-custody. There are no deposit or trading fees, just a clear 1.2% spread whenever you buy or sell, lol. That covers our operating costs, so you always know exactly what you're paying. Withdrawals at just $1.18 AUD or as low as 400 sats with AutoSend. No hidden charges, no surprises, just a fast, reliable, and easy way to stack sats with total transparency. Get started today at hardblock.com.au. Bitcoin made easy for Aussies.
For sure.
All right, let's talk about some more headlines. A couple more Australian headlines we can blitz through. So, Australia has appointed a pro-crypto assistant minister. So Andrew Charlton, he has been appointed as assistant minister for the digital economy. Digital economy, artificial intelligence, and other emerging technologies. So he's working with the Minister for Industry and Innovation. He's touted as a pro-crypto kind of guy, crypto enthusiast, somewhat. So his appointment is being cheered and thought to be a positive amongst our friends in the crypto industry. And some of those big international players that operate in Australia are saying it's a positive step. Now, I had a quick look at this guy. I had a look at his Twitter. He's just a standard politician. I would be expecting nothing but just turds to come out of this guy. Nothing positive is going to come out of this. You watch his videos that are about crypto. He clearly doesn't really know what he's talking about. He uses words like blockchain. he says things like we're backing blockchain, and uses the word digital assets. So he's clearly read the memos. He's been handed some memos from some staffer who's said, this is the party line in regards to cryptocurrency in Australia. Follow this. And
Politicians love alliteration, don't they?
yes.
Or their script writers do. I don't know.
Yeah. So even though our friends in the crypto industry are saying this is a positive, end of the day, you can't expect anything good to come out of stock standard Australian politicians. So I don't treat this news in a positive sense at all. I think it's just going to be more and more regulation, and on the side of what these large crypto players want, these big international crypto companies, your crypto.coms, your Binance, all this sort of thing, that are calling out for that regulation trap to be placed to stop any players from coming up and threatening their position at the top of this new industry. And unfortunately, Andrew Charlton seems like he's just the stooge to do exactly what he's told to make that happen for these big players and for these government guys.
Yeah, this is like a meh thing for me as well. Like, people are they like to look like they're busy, particularly if you're a bureaucrat or you work for the state politician. And I was listening to some Ram Dass actually the other day. He basically says that rules give an illusion of safety and structure comforts fear. And I think that works on both sides. It's good to have a bit of structure and some rules individually, but at the scale of the state, the temptation for interference to set down more rules, to create more structures, more regulation, and you just get some fella that's riffing on the talking points and not really even thinking too deeply. We all thought that Gary Gensler at the SEC was going to, be a legitimate Bitcoiner, and look how that turned out. Like, you know what I mean? People just got to stop paying attention to pretty much anything politicians say, to be honest. Yeah.
Yes. And remember the promises from the government in the wake of the election. They just, again, it's just about regulation, and they might say some fluffy things to appeal to certain groups, but it's den of snakes. Don't trust what they say. It's all bad.
It's also tiresome.
It's also tiresome. That's it. Yeah. All right, let's whiff through some quick headlines and maybe wrap this up nice and tight. There was a Australian guy, Shane Stephen Duffy, in Queensland. He was found to be attached to a hack of a Bitcoin exchange back in 2018. Few different hacking incidents actually that this guy's supposedly involved with, and he's suddenly been found out. And they've gone and they've seized his mansion, his Mercedes, bunch of Bitcoin, 25 Bitcoin from this bloke. And yeah, so this was alleging from hacks done back in 2013 was his first one that they've alleged he's related to, and then a few more since then. So it's interesting that, you might think that these scammers, these hackers might think they've gotten away scot-free, but then they do find ways to get you in the end. So yeah, don't really have any particular comments there, but it's just a case of someone getting their due, I guess.
Yeah, I mean, F around, find out, that sort of meme basically is the move there. And like, all power to him if that's the thing. If he's stealing from people, obviously that's egregious. And yeah, thanks for coming. We've found you, and here's the law, buddy. Yeah, I'm down with that. I reckon. Oh, sorry, go on.
Well, the only reason I sort of really brought this up, because it is just a standard, criminal did a crime and got a slap on the wrist. But the reason I did want to mention it is because the article did mention the AFP's unique powers in seizing assets that it suspects are the proceeds of crime and cybercrime. And so obviously appropriated his mansion, his car, and some Bitcoin that he had stuffed under his mattress. And it is interesting that they talk about their special powers to appropriate these funds and then direct it towards state treasuries. And whenever I see stuff like this, I'm always thinking, how could this be used against more legitimate people in the future? And this could come back to people trying to avoid things like this egregious capital gains, super fund balances over 3 million in the future. If people start taking steps today to protect themselves from that, could something like this AFP special powers be used against someone trying to protect their wealth in the future?
Yeah.
So it's something to be aware of, that there are these powers that I'm waiting. I always wonder, when are they going to start to use these powers to target just regular people that are not committing crimes? They're just trying to protect their wealth and savings.
Yeah, I mean, it's the term unique powers. If that's what the journalist wrote, like it's in there for a reason. It's to trigger you. I mean, it's gross. It's gross. Unique powers, like they're not magic. They're not sorcerers. Chill out.
Yep. That's it. All right. So there was a Coinbase breach that hasn't really been getting too much light of day, but there was a Coinbase breach that affected 70,000 users. This came out in a court case in Maine, over in US, the state of Maine. There was a filing that said that 69,461 Coinbase users were compromised in this breach. And they seems like it's been kept fairly low key until now. I wasn't aware of this breach until till this article came forward. So they've definitely kept it quiet. The breach was $400 million of losses as a result of the scams, social engineering scams, and remediation costs. That was a statement from Coinbase itself. So quite a big breach here.
Brian Armstrong came out on Twitter and like released a video, sort of like a tough guy video, saying we will not comply, and we're going to have a $20 million ransom to get the information back. And he flipped the script and said, we'll offer a $20 million bounty to find these people and bring them to justice, et cetera, et cetera. I mean, the basic line here, and obviously, we're HardBlock, we're a Bitcoin only exchange, and we have to adhere to AUSTRAC rules and regulations, but KYC is the real criminal offense here. Like, none of this would happen. This is just another one. This is another Medibank. This is another Optus. This is another, you name it. You got a deep database of people's personal information, with very, very poor security. And this is inevitable. This is what's going to happen. I mean, I'd shudder to think how many dark lists, my name is on, like the Ledger hack or something like that, back in the day.
Yes.
When I bought a Ledger, and it's like, thankfully, I've taken steps to mitigate any of that stuff, but it's pretty gross,
Yeah,
it's
as you say, it's the problem with collecting the data in the first place, right? If we weren't made to collect this data, then it wouldn't be sitting there on these databases for scammers and hackers and social engineers to take advantage of and sell the data in the first place. So criminals are gonna commit their crimes regardless of what information needs to be provided. Really, this just results in legitimate customers having their information leaked out and then taken advantage of. And this one's quite, needs to be mentioned, that the damage, the $400 million of losses, is mostly through social engineering scams. Yeah. So it's not necessarily that, even if the data was perfectly protected and wasn't hacked through vulnerability in their software and their data protection. In fact, it was through scammers working with customer support reps of Coinbase that led to the leaking of the information. So even if you had the best data protections in the world, this can still happen because the data's there and
the incentive's too big.
Yes, exactly.
Show me the incentives, show the outcomes. It's incentives all the way down, and I don't know if anyone caught from a few months ago, maybe 12 months ago, I don't know. There was a Junseth a podcast that he actually recorded one of these social engineering scammers and sort of just had a conversation with them for about, I don't know, 40 minutes, half an hour. And, these are just kids that they've got this is their job effectively. It's not even like they're criminal masterminds and they're being evil. They just get given a list and it has a bunch of names and numbers, and they just go through the list just like a telemarketer would, and they call them. And if they get through and they get a bite, they get a nibble, then they keep going and they keep going until they can't keep going anymore. And if obviously the end result is to steal your funds, whether that's, especially if it's held on an exchange, which is why we certainly advocate, and everybody in the Bitcoin space advocates for self-custody. Take your Bitcoin off the exchange, learn how to use it properly, take self-custody, and use the tools, because it's really, really bad. But again, it goes back to those rules and regulations having, shall we say, unintended consequences, which again, as you were talking about before with the unique powers, how could they be applied, whether intentionally or not, to someone that's completely unaware and innocent of all of this stuff? We've only got 24 hours in the day, 12 of those max, maybe, to actually like expend time and energy on various tasks that need to get done. It's just like another thing you have to worry about, because once again, you bring in, you have a meeting in a room, you have an idea, you write a rule on a piece of paper, you rubber stamp it, now everyone has to comply. It's just make work basically for suits. But what I want to get to before we wrap is the Wallet of Satoshi non-custodial feature launch, because off the back of that KYC data breach, I remember a few years ago, I was chatting to a friend and I was trying to explain Bitcoin to him, and I said, look, I'll just send you a few sats. And I sent him 1,000 sats or something from my wallet, and he downloaded like a Wallet of Satoshi. And at this point, this was a few years ago. Great Lightning wallet. Anyway, I remember him receiving the sats, and he said, is that it? Like, do I need an email? Do you need my name? I'm like, no, man, like, that's it. Your wallet. That's it. They're your sats now. Final settlement, done. He couldn't believe it. He was like, wow, okay, that's amazing. So that's the thing. Like, it's peer-to-peer digital cash or peer-to-peer electronic cash. Use it as such. Obviously you have to buy it through an exchange. You can mine it. You can earn it, receive it as tips or income or whatever else. Like, get some Bitcoin, but take it in self-custody. That's the important thing. And it's cool, actually, this new Wallet of Satoshi non-custodial feature, because I do rate it as one of the best normie wallets, pre-coiner wallets that you can get someone to download, and it just works. It just is,
And what's the issue that they're solving is, so I vaguely remember that Wallet of Satoshi pulled out because of there was an unclear regulatory market in the US at that time around custodial Lightning, because it didn't have full KYC. It didn't have all the checks and balances that
money transmitter license, all of that stuff.
Yeah, so they pulled out, but then it sounds like the way around all of that is to make it non-custodial.
Yeah, no, I think it's mostly the regulatory environment. Obviously, with the Trump administration coming in, it's a lot more lax, because this all came off the back of, there was like a chilling effect once the Samurai devs were locked in a box. And obviously that came off the back of the Tornado Cash case as well. So, and just as a reminder, like the Samurai devs are still in custody.
Yep. Free Samurai.
Yeah.
Gotta be said.
But it's interesting. Like, so Phoenix have obviously come back into the US market already. And now Wallet of Satoshi are following in their footsteps because of a lighter regulatory market, a more favorable one. And then they've implemented this non-custodial component to their wallet, which is great because it is genuinely a very, very simple wallet. I've sort of moved on personally, but I think for anyone that's new to Bitcoin, and particularly with this new non-custodial feature, similar to Blue Wallet, it's very simple, very elegant, and it just works. So it's pretty cool news.
Very cool. All right. I've just got one last thing to riff on, and then we can shuttle off. Just for anyone interested, they can look into it a bit more. But something called the Genius Act has passed in. It's passed the. Where was it? Passed in the US. I guess it's their House of Reps, or is it their Senate? Anyway, the Genius Act. It's basically legitimizing stablecoin as a crystallizing some of the regulations around that, and basically making it seem like a more legitimate proposition, and opening the door for financial institutions to start issuing and dealing with stablecoins in a more open and regulated manner. And the reason it's relevant for Bitcoiners is because the act does include a bunch of things around KYC and information on transactions and how they're handled in a regulatory sense. But a prediction I have off the back of this is I suspect that within 5 years we'll see stablecoin as like a predominant form of transacting, particularly amongst third world nations where they don't have stable fiat currencies currently. I think that the system seems to be trying to move onto a stablecoin standard before the current fiat standard crumbles.
Mm-hmm.
People that are in the know will obviously find a safe haven in Bitcoin, but it clearly looks like stablecoin is what they're going to try to use to save or at least be a life raft from one kind of shitty fiat system to the next shitty fiat system on stablecoin rails. So it's something to keep an eye on. I think we will see this really start to ramp up and will become a bit of a standard in countries that have crap fiat currencies. Could be coming to Australia soon if the Pacific peso keeps letting us down time and time again. But yeah, time will tell. But yeah, the Genius Act. If you're interested in reading about stablecoins in their future, have a look at that one.
Before we wrap, I want to mention it's May 22nd, 2025, but May 22nd marks the anniversary of the first real world purchase in Bitcoin. Anyone that's been in Bitcoin long enough would probably at least know this event, but let's see now.
Poor Laszlo.
Laszlo's legacy. On May 22nd, Laszlo offered to pay 10,000 Bitcoin for a couple of pizzas. And he made a post on the bitcointalk.org forum, and no one really took it up straight away. But eventually a guy, Jeremy Sturdivant, offered to pay to buy the pizzas for Laszlo. And then Laszlo sent him 10,000 Bitcoin. It was actually 10,001 Bitcoin if you account for the one Bitcoin transaction fee that he had to pay. And you can actually see that block. I've got the transaction up on a tweet on the HardBlock Twitter page. I might even chuck it in the show notes. But I asked Grok this morning to run the numbers on how much that Bitcoin would be worth and how much those two pizzas cost in today's dollars. In US dollars, it's $1.08 billion. And in Australian dollars, it would be $1.68 billion. That's an expensive pizza. You know, we do this every year, but it is fun. It is fun. I think the coolest thing about that whole event was that, you know, it was instrumental in making Bitcoin what it is today. You know, it proved out that it could be transacted for real world things. And it doesn't really matter if it was a pizza or a table or a computer or anything. The fact that it was a pizza makes it even cooler because we all get to eat pizza tonight. And yeah, man, I just think, you know, without the Laszlos and the Jeremys of the world, gosh, you know, it might have taken a little longer at least.
Question is it worth $1 billion to immortalize yourself forever?
Well, the interesting thing is that Laszlo was actually mining with GPU Bitcoin miners at the time, which were exponentially more powerful than the CPUs that everyone was using around that 2010 time. And there's actually I think there's a tweet, or sorry, a reply that from Satoshi that says that he wasn't particularly happy about it. And that, what's it say? Nakamoto wanted Bitcoin's early use to be as fair as possible. And effectively he thought that, by using these GPU miners that you were upsetting that fair launch, so to speak. So I mean, if bro's got like 10,000 Bitcoin to spend on 2 pizzas, and he's mining with GPUs when everyone else is still on CPUs, he's probably got a bag.
Yeah, he'll probably be all right. All right, very good. Well, thanks for your time, DJ. It was lovely talking to you, going through some topics, and we'll wrap it there. And we'll be back in another fortnight to give you guys all an update on what's going on in Bitcoin in Australia.
Yeah, and just let me just quickly shill HardBlock. Don't forget, we're Australia's longest running Bitcoin-only exchange, the best Bitcoin-only exchange. We've got the best UX, UI. It's just clean. It's just simple. It just works. And make sure you're stacking sats with us. And if you want your friends and family to learn a little bit more about Bitcoin, you can always send them the Easy Bitcoin book. And we've got the digital download as well, which we'll chuck in the show notes. Because what are we at now? 172,159. So it hasn't really moved a lot while we've been on air, but who knows where the price is going to be. Well, there's a prediction, Mike. What do you reckon? What's the price going to be in 2 weeks' time?
2 weeks' time? 130K US.
Okay.
How much is that in Aussie dollars?
I'm going to say 600,000 US.
Ooh.
Yeah.
So my prediction
I got no time for bears.
My prediction's 200K Aussie dollars.
By conference day? That's next week.
Oh, by conference day. Oh, that's a good point, actually. We'll see.
Bitcoin
Who knows?
conference
Who knows?
next week.
It's going to be a number.
It's going to be a number. Righto. Well, I mean, our boy Fred Krueger reckons 600,000 by October, but I'll give it a fortnight. We're just going to melt some faces. Let's go.
Very good. All right. Thanks, DJ. I'll see you next time.